Picture this, you've got $10 million in Bitcoin and your private bank now offers you a flexible facility where you can borrow up to 40% of the value of your coin. What that means for you as a client is that if you've got Bitcoin and you're holding on to it for the longer term, you don't need to sell it. You won't crystallize a capital gains tax liability and you're getting liquidity. Well, if you've got $10 million in coin, you can borrow up to 40% loan to value, which gives you $4 million as an overdraft facility. It can be a deposit for a house, buy a private jet, buy that dream super yacht, holiday home, etc. That money is for you to do what you want to do with it. In other words, the loans will pay for itself, which is fantastic. Today, we're exploring one of the most fascinating shifts in wealth management and traditional private banking that is now happening, which is fantastic news. The game has changed. What is happening is now one of the private banks is now not just acknowledging crypto, they're lending against it. In some cases, up to 40% loan to value. If you're a long-term holder of Bitcoin, the last thing you want to do is sell. Selling means crystallizing capital gains, potentially triggering a tax liability, and also losing your potential upside exposure to Bitcoin. With this new private banking strategy, you don't have to. Instead, you can borrow against your Bitcoin. You can buy property, fund your lifestyle, or reinvest back into the market. For many of my high net worth clients, this is a way of unlocking capital without giving up on their conviction in Bitcoin's long-term asset value. But the great advantage is these investments are structured to generate enough income to service the debt. In other words, the loan pays for itself. That's the beauty of this strategy. Of course, this isn't without risk. So this strategy isn't for the faint-hearted. Let's be clear, this isn't a strategy for everyone. Bitcoin is already a high-risk, high-volatility asset. Adding leverage on top of that increases the stakes even further. That said, for high-net-worth individuals with diversified portfolios, these risks can be managed, and in returns, the rewards can be significant. They don't want to sell, but they want liquidity. Clients get liquidity without liquidation, and banks expand their product suite to remain competitive. Today, they're lending against it. So if you're holding Bitcoin, if you don't want to sell, and if you're looking to unlock liquidity for investment, property, or lifestyle, this could be the strategy for you.